Welcome back to Palisade Radio. I'm your host, Tom Bodrovics, and joining me today is a new guest on the show, Johann Wiebe. He's the lead precious metals analyst at Refinitiv. How are you today, Johann?
I'm very well, Tom. Thanks very much for having me.
Absolutely. So, Johann, we've seen demand for the precious metals, especially bullion, really increase since the pandemic and since we've seen the gold and silver price really go up. Have we seen a drop back to normal for the demand on physical bullion, and as well as, let's say, seen the price of the premiums for physical come back down to closer to the paper price?
Yes, in short, we have. So alluding a little bit to that question, during the start of the COVID-19 pandemic, you saw a massive spike in demand for various mints and refiners, but at the same time, you also saw a cutoff in supply in terms of like operations needing to be shut down, and also the movement of metal, particularly precious metal, gold and silver, was constrained due to the fact that there was far fewer flights taking place, and a lot of the precious metals these days get shipped actually by commercial airlines. You don't know actually that you might be sitting on a ton of gold or so when you're taking your vacation holiday to the next destination. But since that was constrained, you kind of saw like the movement of metal being considerably constrained, so to speak. Yet at the same time, with the massive amount of liquidity being provided by the central banks and the development in the stock market, the massive plunge, people in general, particularly in North America and in Europe, in parts rushed to the various bullion dealers to buy their physical metal. And as such, premiums absolutely skyrocketed. I mean, I follow quite a few of the bullion dealers and both parts of the continents, and I've heard premiums being quoted to the tune of 100% above spot, particularly for the case of silver. Silver seemed to be quite in vogue, although gold sold out pretty quick as well. And as such, prices skyrocketed. Some bullion dealers were desperate for metal. They were sold out quickly, as was the mint, so to speak. They did not, the US Mint in this case, they did not see the massive spike in demand coming. Obviously difficult to plan for such an anomaly in the markets. So this was more like in March and April. Since then, I think particularly March, since then, April and May, things have slowed down a bit in terms of like the strength of demand and the tightness of metal. Yes, it is still not as easy as it was before the pandemic to get precious metals products, retail products, what is that, grains, coins, and small bars. But at least some of those tightness, the massive tightness has dropped off a little bit. So premiums have come down as a result as well, but they're nowhere near as low as they were before the pandemic. Before the pandemic, when I talked to many of the dealers, they were, well, not complaining, but, they were indicating that, it would be great if some of the products were not just a commoditized good in the sense that all the coins almost seem the same in terms of that denomination. 1 ounce of gold is 1 ounce of gold, and the premiums on top of that are very small. There's a lot of material available and can freely move. But since then, those premiums come off considerably, and as such, we've seen a little bit of an ease in the tightness, but they're still much higher than they were before. And in that sense, a good thing for the dealers, maybe not so much for the consumers in terms of like that they have to pay higher prices, but a warning that maybe it is good to take this sort of in consideration. Then I'll leave it. Then I'll leave the question where it is. Take it in consideration that it's probably wise that if you want to hedge your portfolio for downturns, economic downturns, to buy gold and silver in times where they're actually abundantly available, as opposed to wanting to buy it in times when suddenly availability is constrained.
So as you were speaking and you said that silver is really in vogue, is that, in your estimation or your opinion, because it's so much cheaper and more accessible for the average retail investor?
Okay, yeah, that's a good question. Yes and no. I mean, we also saw quite a considerable increase, particularly in silver and ETFs, which obviously is also a lot of retail buying, but the same was in gold, which also tends to be a little more institutional investment. I mean, the interest in silver has a lot to do with, yes, it's more accessible in terms of its price. It's usually leveraged play almost on the gold, on developments in the gold market. Usually silver tends to overshoot or undershoot price developments in what's happening in gold. Although lately, particularly the last couple of years, it's been lagging that development. And it's particularly the lag that silver has portrayed in recent years that make it such an attractive investment if you're bullish about gold in particular. Let me explain. I mean, if you, for example, look at the ratio gold expressed in silver or silver expressed in gold, the ratio spiked up to, I think, above 100 ounces of silver for 1 ounce of gold, whereas the average over a long term, maybe like 40 to 50 period, is around, I think, between 50 or 60. So even if we're talking about a new mean where the average is not maybe 50 or 60, but the average is maybe 75, you could see that silver is still considerably cheap compared to gold, or gold is expensive compared to silver. And now with the bull run, so to speak, having emerged in precious metals again, or at least a far more optimistic market sentiment, you see that a lot of investors are recognizing that opportunity as well, and being advised by their various sellers and bullion dealers that gold is good to invest in, but if silver might have more upside potential if you're bullish on precious metals. Hence why the interest in silver has been considerable in recent months.
So recently, Johann, you posted a very interesting chart on Twitter about silver, kind of contrasting the silver price and the silver sentiment. So looking forward, in your estimation, is sentiment changing, especially for silver, but as well as gold looking forward?
Yes. So I think the sentiment for both for precious metals, so gold and silver in particular, platinum, palladium, and rhodium, for example, a little bit of a different beast. But I think the sentiment for gold and silver has improved considerably in the last 2 months. I mean, it's very much along the lines as many of the market participants have been talking about the last couple of months. I'm not sure to what extent I can really add something to that, but I mean, the extensive increase of liquidity injection that central banks across the various countries have provided have built a case for gold and silver in the short to medium term, maybe even the long term. If there's going to be deflationary pressures or inflationary pressures, the fact is at least that balance sheet have massively increased of the various central banks, and as such, it is advised to have some sort of an increased allocation of precious metals in your portfolio. And when you even hear the big names in Wall Street talking about allocating more of their portfolio towards precious metals, I think in general that reflects the overall sentiment to becoming much more bullish. So in that sense, we're very much aligned with that sort of understanding that gold and silver definitely have a far stronger upside ahead of them than, for example, that the risk to the downside is available. That said, I mean, we've seen a little bit of a dip in precious metals, particularly on Friday when the non-farm payroll numbers were far more optimistic than everyone expected. Maybe that's not a bad thing to get a little bit of a breather in terms of still what we consider an upward trajectory of the price. It still seems to a certain extent challenging to take any positions that are basically counter to what the Fed is trying to achieve. So basically, if you would go long gold and silver, you'll be hedging yourself against maybe economic downturns, particularly reflected in the stock market. And what we've seen at the moment actually is that stock markets have performed remarkably well, despite the fact that earnings for various companies across the board are probably going to be disappointing for the rest of the two quarters of the year. So as such, silver and gold have not been able to continue that upward trend. But I think despite the risk on attitude and the optimism that seems to be present in the stock market, duly because it's so supported by the central banks, I think there's plenty of upside to be had in gold and silver as well, because I don't think we have seen I think we could well be in for another correction in the stock markets once the understanding sinks in that the underlying sentiment is not as strong as maybe we anticipated, and the euphoria kind of dissipates away, and gold and silver will recuperate from the points where they are at the moment, and then have a bit of an opportunity to push through that bull run that they kind of started.
So, as you were speaking about platinum, palladium, and rhodium, can you make the case for, let's say, those three as a precious metals investment for those of us that don't really think of them in those terms?
Absolutely. I think those three, platinum, palladium, and rhodium, have a lot going for them. Obviously, if you look at the downstream demand, obviously, if you look at the fundamentals, there is a lot to be said for palladium and rhodium moving kind of in sync, and platinum a little bit on its own. That has much to do with how they're used in particularly autocatalysts. So platinum is widely used in diesel autocatalysts, and since the diesel scandal and the emergence of electrification in cars, you see that platinum has suffered a bit in terms of demand, because simply there were not that many diesel cars sold. And once the cars that were sold were more moving towards gasoline and hybrid sort of vehicles. Palladium and rhodium, on the other hand, are more utilized in the gasoline cars, and I've seen a much more stronger upturn in prices, particularly in 2019, the beginning of 2020 as well. And with all three metals, I mean, it is. Two things are important. One is obviously the rise of vehicle sales for them to be more required, and the second is, of course, the amount of metal per vehicle that determines the demand for the metal. So the rise, particularly with the metal per vehicle, is increasing due because emissions legislation, so that's legislation to reduce various pollutants from cars, has been increasing across the board. You've got the China 6 implementation, although there might be a little bit of a delay with the latest one, China 6B, I believe it is, in terms of because of the COVID. But across the board, the emissions legislation in general works only in one direction, and that's tighter. That means, in general, you need more precious metals required to deal with those emissions, to be able to be compliant. As such, palladium and rhodium in particular, because you see that in gasoline markets, have been in high demand, particularly China, because it was going to that next stage, has been buying a lot of the metal, hence why we've seen the price increase as much as it did in the last maybe 6 months. Now, obviously, COVID has brought everything a little bit more back to normal levels, in the sense that I think the market has contracted on both sides of the equation. So demand obviously went down because car sales fell, but supply also contracted because, particularly in South Africa, we had stoppages and closures of mines. And a lot of the PGMs, platinum, palladium, rhodium, are mined in South Africa, particularly platinum and rhodium. Palladium is also largely mined by Norilsk in Russia. So a contraction of the market on both sides has probably seen it shrink a bit. The market looks a little bit more balanced in terms of its market, and not so much in deficit as we've seen, for example, in the previous year, particularly for palladium, which has pushed up the prices so much. So I think in terms of like investment prospects and how you could get involved into those markets, is I think for palladium and rhodium, for the gasoline side, things look at the moment this year maybe a little more balanced. So not so much a deficit, and therefore not too much upside for price potential, in my understanding. But the coming years, when the economies start humming again, literally with car sales increasing as well, I think the upside for palladium and rhodium is still considerable. Platinum is a little bit of a different beast, because, as mentioned, it's more diesel allocated, but the recent developments in terms of switching platinum into gasoline vehicles for palladium, because the price differential is so big, might provide a little bit of upside for that price as well. And now there's various ways you obviously can play it. You can go to the various stocks that the various companies that mine those metals in South Africa or in Russia, or you can play it via the ETFs if you're interested, or you can even buy retail products, although they are usually a bit more tricky in terms of you need to be able to offset the premiums and maybe the taxes that need to be paid in some countries. But those are the prospects that we have in our consideration for the PGMs.
So before the call, Johann, we were speaking about hydrogen fuel cell generation, and you're kind of an expert in that area. Maybe explain to us a little bit about how platinum plays a big role in hydrogen fuel cells and how we could see demand grow from that sector.
Sure. I mean, hydrogen and fuel cells have been around for a long time. I mean, probably longer than I've been around on this beautiful world that we're on. But it has been a technology that is in development for a while, and it had previous periods in the past where the industry was convinced that it was going to take off, and repeatedly it has not done so. I think this time is different in terms that you both got pull and push factors that are weighing in favor for it. Pull in terms of the technology progress that has been made to date, particularly also reducing the cost of total cost of ownership and the cost of the technology to implement it in various applications. And the push factor in terms of the emissions regulation, governments being very keen to reduce the pollutants that are being produced from various ways, transport and industry, so to speak. So in that sense, there's a lot of interest now into net carbon, zero carbon, energy transition towards those sort of technologies, and hydrogen and fuel cells can play a big role in that. Now, fuel cells, for those of you that don't know, is basically an electric vehicle that is run on hydrogen and has a fuel cell in it, and a fuel cell basically combines the hydrogen from the tank with oxygen from the air, and then that creates an electric current. And in that catalyst is platinum used as a membrane to take care of the process to generate energy. And the rest product of hydrogen and oxygen obviously is water. So in that sense, it's a emission-free sort of source of energy. Now, platinum at the same time is also used in a reverse in, for example, an electrolyzer where you would generate the hydrogen, because hydrogen is very abundant in the universe, but it's always bound to something. Either it's bound in natural gas, or you have it in various other, for example, water and other forms. So for the big thing is to get it out of the current state and into an isolated form, such as hydrogen. So an electrolyzer is a process where you take water and split the hydrogen from the oxygen, so sort of the reverse what you do in a fuel cell, where you put the hydrogen and the oxygen together to create a current. So an electrolyzer would split the hydrogen and the oxygen and also using the platinum catalyst for that. So in that sense, platinum is widely utilized in the use of hydrogen and fuel cell applications, and particularly also because there's different fuel cells then, of course, that you can use, but particularly also the one that is used most abundantly, which is the PEM-FC, so to speak.
Excellent. So how far do you think we are away from seeing a commercial application of a fuel cell like this being built? And do you know how many ounces of platinum go into most of these fuel cells?
Yes, so applications are built abundantly and they're accelerating at the moment. Toyota, for example, in the light duty space has been, well, not the father, but has been pushing this initiative considerably over the recent years and is continuing to do so. It's opening up all its patents for others to join. So it's not keeping the cards to its chest, but it's opening up for other OEMs to get involved and develop this sort of application further, so it can have a wider reach and a more implementation going forward. And obviously then you get economies of scale, and then you can get the cost down, make it more competitive. So that sort of catapult effect. They're actually betting quite heavily in this space. So there's a couple of OEMs that are developing fuel cell technology. It's in light duty vehicles. I mean, there's a few pros and cons if you compare them to battery electric vehicles. It seems to be at the moment, without sparing you a little bit the vast amount of details, but it seems to be the moment that the main thing that fuel cell has going for it is obviously range. It can go longer without having to refuel, and at the same time, its refueling is much quicker. So you have maybe 500 kilometers of range in general, and then the refueling is the same as a petrol, diesel, 5 minutes. Whereas a battery, the range is much shorter, and at the same time, even the fast charging is 20 to 30 minutes. So there's that. But then a battery, for example, has, if you look at from well to wheel in terms of the emissions that are generated, because yes, you could say there's no emissions when you're driving an hydrogen vehicle, and there's no emissions when you drive a battery electric vehicle, but how is the electricity really generated? You have to ask as well, of course, because you want to see that from well to wheel that the emissions is in fact zero. And for hydrogen at the moment, it has a disadvantage that it mainly comes from natural gas or from coal gasification, and the water electrolysis I was talking about is still like a very small part of the hydrogen generation. So in that sense, it has a disadvantage, and we really have to move towards the electrolysis route by ramping up massive capacity in the coming years. And that there is development in that area taking place considerably. The other thing it has, battery, for example, has in favor for it is that the energy conversion efficiency, for example, from well to wheel is much higher as well, because with hydrogen, like I said, you don't have it available. You need to get it out of something first. So to generate it out of water, it needs a lot of energy to be able to do so. Then you have to liquefy it then you have to ship it, then you have to store it. And then, for example, it goes into your car, you have to get it into the right form so it can go into a tank. So all those stages along the supply chain, there is efficiency loss and there's potential emissions that are generated. Whereas with electricity from the grid, from renewables that goes straight into a battery storage, so to speak, and then into a car, that route is much quicker and therefore the efficiency is much higher. So hydrogen has that a little bit going against it at the moment. The upside, however, is that you could use the renewables energy that is currently in excess in many countries, for example, in certain peak and troughs during the day. So if there's, for example, in California, they have during a certain period of time, there's the renewables create so much energy that is higher than the demand, and they have to switch them off because the base load already supplies enough energy. So instead of switching that renewables off, which is actually madness if you think about it, you might as well use that energy towards splitting the hydrogen, so to speak, and then storing it. And then at least you would have found a good way that is carbon neutral to generate the hydrogen and then obviously use it in downstream applications. Now, shortly, a little bit more then, and then I'll go back to you again before I get too long-winded about my answer. But transport is obviously a big one for hydrogen, and I think particularly in the heavy-duty side, it will find it has its highest proposition, so to speak. But we will also see, and that might not directly have a necessary immediate effect on platinum because it might not be used as a fuel cell, but we could also see hydrogen being utilized in industry where it will function as an input to generate electricity, and, for example, also be blended in the gas network for cooking and heating. And then in terms of the application of fuel cell, you can go into aviation that's being looked at, and marine is being looked at, and also rail applications replacing, for example, diesel trains, so to speak. So in that sense, there's a lot of things going on in that space. And there's also, in that sense, a lot of potential for platinum. But it still needs a little bit of a time frame as to when we would get there. I think it would easily take another 5 to 10 years before we could see more of a wider scale mass adoption of a hydrogen and fuel cell technology in our society today. And in terms of your question, how much platinum is used today in a fuel cell, I think the total market makes up around 50 to 60,000 ounces, which is not a whole lot at the moment. And in terms of the amount of platinum per fuel cell, I think we're about maybe half an ounce, 15 grams thereabouts of state of the art in terms of a vehicle that it uses of platinum. So the idea is to bring it below 10. But obviously, there's always a trade-off between performance and functionality and reducing cost, right? And eventually, they would like to bring it to as low as the amount of platinum or PGMs that are used in a normal catalyst for fossil fuels. So those are around, depending on which market you're talking about, maybe 4 to 5 grams. So that would need another 50% reduction in order to bring it there. So there's still plenty to be developed, to be set for that technology. At the moment, it is emerging and developing fast. There's a lot of interest. There's also governments that are putting support towards this technology at the moment, right? So the industry is not only dependent on its own, but there's programs and capital being allocated towards these initiatives, which could give it a push in the back. And yes, despite the fact that the push towards reducing the amount of platinum used per catalyst will be ongoing, so-called thrifting, that should be offset, more than offset, by the increase of applications and volume of the applications that we're going to see in the coming years. So fuel cells will play a significant role in the demand profile in the future of platinum.
So is there a specific catalyst that we're missing from that market for it to really take off? Is it just efficiency? Is it adoption rate? What do you see as the barrier for real adoption of that kind of technology?
Yeah, that's a good question. I mean, I think in the end of the day, it's all about total cost of ownership, right? What is the proposition that you can make? How much is it going to cost me as a consumer, but also as an investment on the long haul truck, so to speak? I mean, at the moment there's a lot of buzz about Nikola, which is not Tesla. Tesla is obviously the car producer, but Nikola was a truck producer that mainly goes into hydrogen. Recently, having merged with VTIQ. Obviously having a lot of pre-orders in place, but at the moment they have a financing model that will allow you, I think, to lease the vehicles, so you won't have to pay them up front. But the upfront price or cost of this technology is still quite steep because simply we don't have the economies of scale yet. So you'll need more volumes in a sense to be able to get the price down. If the price goes down, it becomes a more interesting proposition. But how are you going to get the volumes if the price is so high? Well, you'll be dependent on government subsidies and incentives, and they're available. And so it will be important in the beginning years that will remain to be the case, particularly in Japan and South Korea, where they're quite advanced in this stage. There is enough support, and I think in the European countries there is coming more as well. The other thing, of course, is the infrastructure. I mean, it's great if I can go 500 kilometers or more, but then where I'm going to refuel, because there is none or very little at the moment available, while that is being rapidly developed as well. So it's a bit of a chicken and egg problem. Yeah, why would I buy the fuel cell vehicle if there is no infrastructure? And the guys are saying, yeah, why would I build infrastructure if there's no fuel cell vehicles? But governments also are collaborating with the private industry and developing this space and building the infrastructure, so people won't have the sort of range anxiety, and that they might be able to go drive somewhere but then won't be able to refuel. So those, I think, are important factors that will need to be addressed before this can find wider adoption. So total cost of ownership, the cost will have to come down further, and the rollout of infrastructure, so to speak, will have to progress, and it is progressing, but it will have to continue to progress as it does.
Excellent, Johann. As we wrap up, is there anything else you'd like to share with us?
No, I think we covered quite a bit.
Excellent. Well, thanks very much for your time today, Johann.
Thank you very much for having me, Tom. Much appreciated.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?